Greetings and welcome back to the Pride. My name is Muphasa El Matador. They call me the Curious Cat. My job is pretty simple. I help grow your conviction. Conviction to buy, conviction to sell, conviction to hold. And today we're looking at the American Towers, AMT. Yeah, man. Before we get into AMT, I have to do a recap of SBLK. Everyone in the Discord, in the Profit team, completely smashed it on this play. If you're rocking with me, I got in at $18. We did the video last week. SBLK was sitting at $26. Over the last 5 days, you can see we're up 13%. I'm personally up 60% on this play. We broke through our first price target of $30. We hit 31, 36 and cooled off for a little bit. The PE ratio has come down. Dividend is up. $2 per share is confirmed for March, second week of March. Earnings were superb. You can see over the last year, from December to December, you're seeing amazing growth in revenue, almost 500 million in the last quarter, 300 million in net income. A profit margin of 60% is any business dream. The demand for dry bulk has continued to grow. I'm rocking with SBLK all the way to 40, picking up my dividend in March. With that said, if you want to rock with us, come join the Profit team by hitting the Patreon link and joining us on the Discord. It's an amazing family. Let's get into AMT. I have always been a believer that the best investments are in companies and trends that are going to last the next 10 years or more. And in my opinion, there is one trend that is not going away. People will always need three things in this life: to communicate with people, to share data, and to get entertained. All of this is done through our current world of cell phones. All cell phones need to be connected to a cell phone carrier: AT&T, Verizon, T-Mobile, any of the big boys. And all these guys need cell towers. AMT owns 180,000 cell towers throughout the world. They operate in over 25 data centers as well. They just acquired CoreSite, which most analysts are not really bullish about because they don't see how it synergizes with American Tower as a company. 40,000 of those cell towers come from the United States, and those accounted for 50% of the revenue last year. 75,000 of their cell towers are in India, 19,000 in Brazil. They have cell towers in the Middle East, in Nigeria, all over the world. Right now, American Towers has a fair value of $188 because it spent a lot of money acquiring CoreSite. I'll be breaking down this entire company for you over the next few minutes. Stick with me. The growth in data consumption is not going to slow down. All across the world, people are always going to need to jump on their phones to make a call and complain about whatever is happening in the world, to go on Twitter, to be on Facebook, and all of this demand plays into the profit margins of AMT. AMT's position as a global company more so than any of the competition, with Latin America, North America, India, Nigeria, most countries in Africa, the Middle East, all having access to 180 cell towers currently owned and operated by the AMT. AMT also has the most tenants per tower. And once you get to understand the business, you see that that is truly where all the money is made. It's very expensive to put up one cell tower. However, you can charge all your tenants the same amount of money without increasing your cost to operate at all. The cell tower industry is completely resilient to a lot of factors. The key ones that I see a lot of strength in putting your money around AMT is they charge more for inflationary times. They're also resilient to geopolitics, also resilient to interest rate hikes. People are going to continue to make phone calls, be on the internet, regardless of what's going on. Consequently, it's hard to find any company in this space that is trading under fair value because money continues to pile in. I put ESRT on the map for you guys to do your due diligence. I see it as a value trap, but it's currently trading under its fair market value. The one-star price for Morningstar is $291 and some change. We're currently trading well below that, so I see a bargain in AMT. I already picked up shares. I will be adding to my position on the next earnings because I'm expecting the earnings to have a little wobble effect with Coresight draining a lot of cash from the company. If you see AMT at $112, sell your house and buy AMT. That was a joke. That was a joke. This is not financial advice. That was a joke. I picked up shares of AMT around $228. The bullish case is pretty simple. The trends that are going to continue to dominate this particular space is the Internet of Things, 5G, video content. All of these things are going to be a big part of our world, as I continue to repeat, for decades to come. Wireless network development in many of American towers' international markets is a decade behind. In the United States, 5G is the current thing, but places like India, Nigeria, 4G is still something that they're transitioning to, and they will transition to 5G. A lot of potential going forward. The bears have a weak argument, but I like to hear them out. The transition to 5G may reduce the demand for cell towers. And I will tell you, if a better technology comes out that can allow us to do all of our communication without the use of cell towers, AMT and all of its competition is going down quickly. So that is a bearish argument that I can stand by. The prosperity of developing nations is something that we can't really put our fingers on definitively, but the amount of money that AMT shelled out to purchase Coresight is a downside because we don't know how or when that is going to be profitable to the bottom line. Let's talk about the moat around AMT. The analysts are giving AMT a narrow moat. I think is a lot wider than they paint the picture to seem, and I'm going to give my argument for this, right? So American Towers, it has laid it all out. In order for them to build a new tower, it would cost them $275,000. They have 180,000 towers. That's a lot of money. Any new player in the game would have to shell out a boatload of money just to build out its first tower. Now, for each tower that American Towers has, they're charging $20,000 per year. It costs them $12,000 to operate, so they see $8,000 in profit when they have one tenant. The good thing about the cell tower business is they can add more tenants to that cell tower and charge them the same $20,000, increasing that profit margin from 3% to 13% just by adding an extra tenant. American Towers is averaging about 3 tenants per tower. So you're looking at a huge profit margin compared to the competition who's sitting at 2 tenants per tower. Crown Castle actually came out and stated that it acquires a new tenant once every decade. And that is a challenge in the industry because AT&T, Verizon, T-Mobile, they're already here. New competition is scarce, so it's harder for them to acquire new clients. But AMT is global, and there is a lot of potential all across the world for new companies to come up that require a space on American towers. All of that being said, the moat around AMT is a lot larger than the competition because of their global footprint. The only thing that I see making it narrow is the fact that they shelled out billions of dollars to pick up Coresight. If that turns out to be a profitable venture, the moat around this company is as wide as it gets because nobody is coming in to take those tenants away from AMT. you would have to give them a sweet enough deal, because taking off your equipment from a cell tower would cost the carrier $40,000 just to take it off. That's 2 years that you would have paid to AMT just to take off your equipment, and then get into a new contract with a new carrier that has to pay $1,000 per month to rent that land that his cell towers are on. That company would have to give a significant deal in order to entice AT&T, Verizon to sign a 10-year contract with them. All of this being said, I see the business as very, very solid. Revenues are also very, very solid, because these contracts last really, really long time with companies that have no other option but to deal with the big player like AMT. All investments come with risk. There is no investment that doesn't have a risk attached to it. However, with AMT, we have a clear risk in front of us. The one thing that we should worry about is the advent of new technology with 5G. If there's ever a time when carriers do not need to invest in these macro towers, AMT is no longer desirable. None of the big players are. That is not going to happen anytime soon. However, it's worth considering and just putting that at the back of your mind. Also, I said many times, the investment in Coresight, nobody knows how that's going to play out. These are the only risks that I see with AMT. I love doing the financials with Google Finance. It just gives me a clear picture of the finance at a glance. The first thing I like to look at is the year range. You're looking at 197 to 303. Currently sitting at 228, so we're close to the 52-week low. The PE ratio of 41 is super high. That's 41 times earnings. However, there are more things to consider before you be like, whoa, I'm not touching this. I like the dividend yield of 2.43%. I'll take that any day. If you pay me to hold, you already know, boy's going to hold. In the last month, we're down almost 7%. However, when you look and just take a step back and look at the 5-year, you see a sweet trend, 100% over the next 5 years. This is a stock that you buy and hold for 5 to 10 years. Continue to take your dividends and just cruise with it. The financials are pretty stable because they have these long contracts. So we have predictable revenue, predictable income. A 30% margin is beautiful for any business of this scale. All they have to do is continue to grow at the current pace. And in the next 10 years, whatever investment you have would be super solid. 1.7 billion in cash, a lot to throw around. They did buy Coresight for 10 billion. That was a big owie. However, we're still in the business. Okay, so I'm going to jump in and compare AMT to the competition. So AMT is currently trading with a PEG ratio of 1.77. That is price to earnings growth. And when you look at that compared to CCI or SBAC, 1.77 is pretty decent for this company. When you look at the earnings per share, you see that AMT is the big dog, almost double what everyone else is bringing in. The PE ratio of 41 isn't as bad when you compare it to 64 from CCI or 110 from SBAC. The PE ratio on AMT shows that it is the cheapest, even though it is the most profitable long-term amongst everything else. Ex-dividend date was December 23rd. So if you're buying it now, you have to wait until the end of the quarter for you to get your dividend. But currently trading close to the 52-week low. I'm jumping in. I really like a lot of things about this. When you look at price targets, you're seeing a minimum 250, which would give us 10% from where we're currently trading, and $350, which is 50% upside from where we are. I'm expecting some weakness coming in at earnings. I'm going to be averaging down and just continuing to accumulate shares of AMT. That's how I'm playing it. I have presented the bullish and the bearish argument. You can decide how you want to play this particular stock. Awesome. We're going to wrap up the video with technical analysis. I love to look at these things from 3 different angles. First, I like to show you the daily chart. So you can see from the daily chart, the RSI is bleeding. This is the bottom of the ocean, guys. It's currently 28%, way oversold. I have my price target set to buy at $215 at support if it gets there, but my buy up to is 237. Once it crosses 237, I stop buying. You can see all these lines going through have their different functions. This is my resistance line, take profit line, if you will, 295. We take profit, skin out, position down a little bit. If you're long like I am, riding this one for 5-10 years, you just buy at 215. If it falls down, you buy some more and just hold it for the long term. On the weekly chart, you can see the pattern still the same. RSI way oversold, 30-something%, and it becomes a lot clearer. But once you look out 1 month, you see that this dip is definitely one you want to buy, because AMT has continued to trade in a bullish pattern since 2012. 2017 was the only time that AMT was trading under fair market value in a really long time. You're looking at $100 in 2017. 5 years later, you're up 100% and pushing. It's an amazing investment opportunity. This is my bullish and bearish argument. I hope I've been able to educate and inform your conviction. If you like these type of videos, do hit the like and subscribe button. We post videos like this every week so you can see our content and make some money with us. You can also join the Discord by hitting the Patreon link. Come rock with the family. We do the simple things consistently. We're researchers, analysts, and investors. Until next time, peace.